Trade. WeCopyTrade.
Let's go.
Good day to everyone joining us from around the world. Whether you are just waking up, midway through your trading sections, or waiting down for the night, welcome. On behalf of the entire WeMasterTrade teams, we are truly pleased to have you here with us for its global live stream sections. My name is Daisy and I will guide you through this exciting 2-hour journey as your host. Today live streams is not just a presentation, it's a conversation. As a winner into the engine rooms, one of the most fast-growing and forward-thinking funded trading firm in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have shared with me WeMasterTrade represent today's skilled trader, mentors, and role model within our community. First, let me introduce the ever composed, always insightful owners. Welcome, owners.
Thank you so much,
Becomes a
Daisy.
fam-
Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategy or rule, but about the ecosystem that WeMasterTrade offer, from how you start, how you grow, to how you earn. This is kind of platform that doesn't just fund trade, it builds trader.
Absolutely, and next to him is someone who brings sharp analysis and clarity to every chat and conversation. He is short tricks, he's sharp, and he is a real force in our trading space. Please welcome Ralph.
Thank you, Daisy, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what we Master Trade offer, but how traders can truly take advantage of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you ever had any questions or even doubts, today is the day to ask them.
And that's exactly what we're here for. Whether you are brand new to the WeMasterTrade or already a part of our funded trader programs, today live streams is going to give you the full pictures, not just the highlight reels. Over the course of the sections, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our program are designed, and why we are doing things differently from traditional broker or prop firm. Now, I want to be clear, it isn't about sales, it's about understanding. We want you to know what you are signing up for, what kind of structure support your journeys, and how you can use that structure not to suggest but scale.
And speaking of structures, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funded project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when they do well. That's the foundation.
Exactly, and from that philosophy, everything we offer, especially our training packages, and will be discussed in detail, and will explain the logic behind each one. What kind of trader they ever look at our packages and through which one is right for me today? We will answer that.
And more than that, we will also do a live comparison between packages. We will break down pricings, account size, maximum products, consistency rules, and even payout side by side to help you make a fully informed decisions. It's one thing to see the number on the website, it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is on how to stay compliant while trading. So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's sessions. We will explain what the daily loss limit is, how it is calculated, why it includes both closed and floating profit and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency rule, and we will even address common misunderstandings about trade sizing and risk purchase policies.
And we're going to explain rule in isolation. We explain them in context of live trading decision. I share some personal mistake I make when I first start trading under funded condition, and how I adjusted because rather than restrict you, they dare to protect you the integrity of your pro.
And while we're on the topics of helping you success, we will guide you through our current promotion plans, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We have some amazing responses to our promotion, but also some confusions. So we're showing you exactly what to do step by step.
From there, we will transition into a discussions on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in line. So if you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes it different from platform. When you trade on funded account and generate profit without breaking rule, we say that profit with you up to 90%. But there's more to it. That's just the percentage. We will plan them the full payout cycle, ratio, and timeline today.
Now, I know many of you watching today aren't just a trader, you're also educators, influencers, or people with a large network. That's why we're also taking time to explain our affiliate programs, and we do it transparently. We will walk you through how commission are calculated, how affiliate referral are tracked, and more importantly, what you need to qualify for payout, including a detailed explanations of the two referee rules and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earning. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income stream.
So as you can tell, it's not just a surface level live streams. We're diving into everything: packages, rules, promos, scale up paths, profit sharings, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decisions possible.
And we want this to be interactive, not just informative. So if you have any question at any point, please drop it in the chat. Our moderator are watching and we will answer as many questions like we can. Your voice matter.
And if you are watching this on replay, don't worry, we will leave timestamp and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they really care about trader success.
And to wrap up the welcomes, I would like to say this. WeMasterTrade is not just platforms, it's a commitment to build real trader, to create fair, structured, and scalable pathways for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you're exactly where you need to be. Let's dive into the journey together. And let's begin since one again. Welcome to the WeMasterTrade live stream. Thank you once again for being with us today. Now, before we dive into packages, trading rules, and promotion mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is and what we believe in and why we built this platform the way we have because you are putting your trust and your tradings into a company's understanding its philosophies isn't helpful, it's essential. And so this next segment is about the origins, intentions, and impacts. It's about how Swimmer Trade begins, what value underpin the firm, and how the value translate into the real tune and outcome for trader like you. And to work through that, I'm joined as a way by two people who live and breathe three principle, owners and reps. And let's start at the beginning.
Thank you, Daisy. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capital trader access to capital regardless of their background, location, and financial institution. We were founded in 2022 as part of WeCopyTrade Group, headquartered in Vancouver, Canada, while CopyTrade Vietnam or Signal Sharing, Investor Network, and Copy Trading Tech. WeMasterTrade were designed to serve more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their savings.
And it's important to note that WeMasterTrade is not broker. That's not just label, it's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we have built from our instant funding packages to our profit sharing model is structured with alignment in mind. We take on the capital risk, we give you the roadmap, and you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principle is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structures. That's why we invested heavily into WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with some courses ranging from introductory trading philosophies all the way to advanced risk calibration and multi-asset strategy designs. The WeMasterTrade Academy isn't just about theories, it's about the implementation. We've designed a curriculum to match the real-world trading environments within WeMasterTrade, so what you learn you can apply directly to your fund accounts. And to ensure that our system and contents meet global standards, WeMasterTrade is proud to hold an ISO certifications which confirm that our education products and trader development program meets rigorous international criteria for quality, structures, and learner engagement.
And that certificate is a big deal because it shows a long-term commitment to developing trader. Not just collecting fee in an industry where many call it from come and go. WeMasterTrade has positioned itself with real operational stability and compliance framework and internal accountability. We're not here for season, we're here to help your career.
And we have seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burdens of risking personal funds. We had students become full-time traders. We had women re-enter the finance world after career breaks, and we have had young professionals from underbanked regions finally access the markets without funding accounts. That's the impact, and that's what drives us.
And this isn't stop there. The WeMasterTrade ecosystem is designed to grow with use for those who want to stay engaged, and after they we maintain the regularly of that blog section where our team of experts and education share quickly insights, trading psychologies, breakdowns, market reaction, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's also talk about the cultures. What makes WeMasterTrade different isn't just the product offerings, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you are in a Telegram group, watching our YouTube series, or engaging with us on live support, you will see that we actually listen.
And I speak honestly here in many platforms, the trader is just customer at WeMasterTrade, the trader is a product. Your performance drive the business and your voice serve the platform and your consistency determine how far we can scale together. That mutual accountability is rare and something we're proud of.
And if you have ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funding account, and connect with people who have gone through the system. The stories are real, the capital is real, and the results speak for themselves.
And to summarize, WeMasterTrade is a capital allocator, a talent accelerators, and education for trading institution. We're here to challenge the status quo of trading assets to build the system that will reward performance over promotion and to create real scalable income opportunity for traders around the world regardless of their starting points. And this more than a platform is a trading movement, and if you are ready to part of it, to the live stream will show you everything you need to know. Thank you, owners and ref, and for deep and honest walkthroughs. Coming up next, we are going to take the foundation and connect it directly to our actual offering. That means we will be discussing all the different account packages available as WeMasterTrade, how they differ, who they are designed for, and what kind of results you can expect from it. Now that we explore who WeMasterTrade really is and the principle we stand for, it's time to move to one of the most essential parts of the live streams and an in-depth discussions on our packages. This is where all is begin for most traders, choosing the structure that's best aligned with the goal, the style, and their current skill level. And when we say packages, we're not just talking about the dollar figure, we're talking about the framework. Each package at WeMasterTrade represents a different pathway toward growth, and today we walk you through all of them, what they offer, how they are structured, and most importantly, who they are designed for.
Exactly, they say at WeMasterTrade we don't believe in one size fits all model. That's why we built two distinct product line for trader, the challenge package and the instant funding package. It like include a variety of account size and configuration because we know that trader come with different strength, reactivity and timeline.
So let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skill before being allocated capital. It structures fair and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
And in the challenge model, you begin with a similar to account and your goal is to meet specific profit target while staying within a strict but reasonable risk parameter. There are three stages in total, phase 1, phase 2, and then a funding stage.
Okay, take for instance about $10,000 challenge, a great starting point for traders who want to minimize upfront costs by building a track record. Let's break it down phase by phase.
In phase 1, you need to achieve an 8% profit target with the 800, without reaching a 5% daily loss or 10% overall loss limit. You have a limited time to achieve this. That's a key difference from many platforms, and we don't pressure you with deadline.
And once you pass phase 2, you will move to once you pass phase 1, you will be moved to phase 2, when your profit target drops to 6%, which is $600. The risk rules remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
And finally, one profile are clear, you enter the fund account where you trade with real capital, have no profit target, and your profit size to 90%. That's one of highest in the industry.
So who is the 10,000 challenge best for? This account is ideal for newer traders or experienced traders who want to start with lower pressures and learn the system. If you are still refining your strategies or you want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
As average, now for those who are confident in their strategies and want to start with a larger sell side, we offer the $25,000, $50,000 and $100,000 challenge packages. The structure is similar to phase the same 5% daily and 10% total loss limits, but the profit target scale proportionally.
For example, in the 50,000 challenge, you will need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the level remains the same 1 to 100, given to room to adjust position sizing.
So who are the mid and high tier challenges best for? The 25,000 to 100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funding accounts. If you have already passed on the broad challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for the $10,000 challenge. The fee is refundable once you become the funders and meet minimum performance conditions. And if things don't your way, you're eligible for a 30% reset discount to start fresh. And if you don't want to go through a challenge at all, but instead want to accept the real capital immediately and get paid based purely on results, that's where our instant funding packages come to place.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced, disciplined traders the chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading backed by a structured, fair, and transparent system.
And what makes it ever more accessible is that you can choose from several different account types, depending on your style, preference, and goal. Today, we going to walk you through each of 5 main instant funding package: standard, 51010, 510 euro, 51010 novice, and customized. We compare the intel, but more importantly, we help you to figure out which package is right for you.
Okay, let me hints quickly. All of our training pack of instant funding packages give you live trading access from day one. That means no challenge phase, no evolution. You pace one, follow the rules, and you are trading like capital. And area counts, no matter the size, includes no time limits, up to 90% profit share, scale up plan to $1 million, and support for EAs, swing trades, scalpings, and even HFT. Now, let's go pockets by pockets and as we go on the same graph. I want to jump in with a real survey. Who should actually choose which ones and what kind of trader you have seen success with it?
Let's start with the standard package. I already tried it to one at best friend for trader who want stability, and you get to up 200,000 in capital and with a very manageable 4% daily loss limit and 6% overall limit.
It's like a calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, there's serious earning potential even if you are taking a slow and steady approach.
And how about the commission?
Competitive across the board, Forex at $4 per lot, gold at $4, Indy at $0.5, stock at just $0.07.
And everything is allowed, news trading, scalping, weekend holding, EAs, HFT, you name it.
And so for audience, if you are someone who trade regularly, understand your strategies and want to a full range of access and plan to play the long games, this is your sweet spot.
So it's perfect for intermediate to advanced traders who already know their edge but don't want to stress with target-based challenge. And if you ever had an account blow into a realistic rule, you will find the standard model refreshingly fair.
I also say it should swing trader. The 4 or 6% risk profile give just enough flexibility to hold multiple day position, especially with weekend holding fully allowed.
Alright, moving up the gears, let's talk about the 5, 10, 10 packets. Same capital sellings up to $200,000, but now you get the 5% daily loss and why the 10% overall lot limits. Why does matter?
Well, that extra cushion is massive for traders who scale into position or take multiple entries per setup. You have got more room to breathe, especially in high volatility markets.
And the profit target here is also 10% with align with the risk window, plus you still get full spot for scalping, EA, new trading. It's a friendly trader.
This is best for day traders, especially those trading assets like Nasdaq or gold that move fast. If you got a tested intraday strategies and just need some breathing room, this is your package.
And also for traders who want structure but am having that profit target, the clear milestone motivates some people, especially if they payout oriented.
Now here my personal favorite, the 5, 10 euros. You get the 5% daily and 10% overall lot limits but no profit targets.
And that's a blessing for high position trader. You no longer chasing a number, you just focus on protecting equity and growing capital slowly and safely.
This one is loved by the low frequency traders and snipper. If you enter 3 to 5 trades a week, this is your space. You are not penalized for financing it. You are actually rewarded for it.
Veteran swing trader, risk-conscious trader, people who prioritize consistent over speed, if that's you, to right here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale cleanly. This is their home.
Now for the rule breakers, or rather, those who don't want to be evaluated on how even their profit are. The 5, 10, 10 profit, 5, 10, 10 no PC remove the profit consistency tracking, right?
Exactly, same 5 to 10 risk profile, but you are not qualified to keep your profit growth smooth.
That's trade copier are not allowed in this one, so it's for mutual trader only, and you need to trade responsibly. But for a fresh sea trader who sometimes hit big spike, this is the place. Perfect for high risk reward trader or any who have issue with consistency rule at other firm. You can trade how you want. Just keep in C and draw the book.
And last not but least, the customized package. This is WeMasterTrade saying you know what you need and let's build it together.
And you can adjust daily lot over lot to your liking. Plus, you can fund up to 400,000 or more any other account.
And it's premium, flexible, and comes with on-trading style allowed, including EA snail trading, weekend holding, HFT, and more. So, who is it for? Top-tier professional as hedge fund traders, signal providers, high-volume traders, anyone with a very specific structure in mind. This package let you build it.
And I will say if you try all model and nothing quite fit, build your blue spring with customized that room is there.
To sum up, every instant funding package we offer comes with a clear risk parameter, fair commission, deep market access, and real profit potential. There are no time limits and payout starts as early as 1 day in.
And no matter your strategy, scoping, swing, echo, and menu, there are an account that align with you if the picking the one right now. So you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
Okay, up next, we'll walk you through exactly how to protect your accounts, avoid breach, and understand the risk and consistency rules that power our entire platform. Alright traders, now that you have seen the packages, let's talk about the parts that either make or break your accounts. And that's right, it's time to dig into the trading rules and how to actually stay compliant when you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their accounts is come down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rule traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
And but here the good news, once you understand how it really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
And so what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you are allowed to incur in both floating and close trader on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
Let's walk through a live examples. Imagine at the start of day 5, the balance is $105,000. Your equities is higher, $107,000 because of open floating profit.
And if you're on a 4% daily loss limit, we calculate up the highest number at 107,000.
So 4% of $107,000 is around $4,000. That means your equity for the rest of the day can't drop below 102,000 or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for close at real times. Even if your trade is floating loss and you haven't closed yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Say it's the start of day 7, your balance is 100,000, but your equity is 99,000 because your open trades are slightly in loss.
And since the balance is higher, we pay the 4% on initial balance, so 4,000.
So now your equities must stay above the $96,000 throughout the days. If it drops to $95,999, auto liquidation kick in. No warning, no more winning call.
So what happens if you break the rules? The system will send a market order to close on trades. Everything will be liquidated and your account is disabled and you can't trade again unless you purchase a new package.
And here the kicker, the auto close happens when the system detects the red zone will cross it. And but due to the market fluctuation, your final P&L might look worse than the actual close red zone. And that because the system executes the closer based on price limit at the time of liquidation.
So even if you only intend to take a $3,900 loss, once slip expires and goes on that desk, and suddenly it's a $4,200. That's why we say don't write the yet.
Alright, let's talk about how to avoid violating this rule because this is where the pro mindset kicks in.
First tip, know your buffer. Never plan take trade to take you right up to the edge of your limit. List at 10 to 50% room below that mark loss, especially in volatile market.
Tip 2, check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day, but your floating loss is tracking your equities. You are leading toward violation.
Tip 3 is choose a dashboard as a tracker. Inside WeMasterTrade, we provide rich dashboards that show your live loss status. Use them, check them, and don't rely on memory.
Also, power trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to reserve trade your way back up.
Another big one, trade smaller during snooze hours. If you are trading gold during a bit with full loss sign, you are practically begging to break the daily loss rule. Cut position size and rise post volatility.
What's at the top Rocky's mistake you see when it comes to daily loss?
Number one, over level trading trader opening position that 5, 6, 7% of their account and thinking they grow quickly, but if the trade turn red fast, it's already too late.
Number 2, holding overnight without checking exposures. If you hold 3 trades overnight and wake up to a 60 big gap, the daily loss could be hit even before you open your eyes.
And the third, assume means that closed trades are all that matter. They are not. Remember, equities include both floating and closed position. The total equity lies in your spot.
And I always say to the new trader, the daily loss rule isn't your enemy, it's your account error, and it's designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive, but only within the box. And if you learn to trade inside the box, you will last longer than 90% of the market.
And one last note, it isn't about rules, it's about truth. WeMasterTrade fund you because we trust that you will manage risk responsibly. The daily loss is there to protect that trust on both sides. And we have explored the daily loss rules. And if you haven't already clicked that one, you are missing out. But now we will move from the daily batteries to the absolute battery. I'm talking about the maximum loss rules, also known as your chaos stop loss, the line that can be crossed, and not just for the day, but for the entire flight of your chaos.
And this is where a lot of traders misunderstand how the rule works. They think, and well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip it away their account and suddenly liquidation.
Well, the max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your trajectory and is closed immediately.
And so, what exactly was it the max lot rules? Let's define simply. It's the total maximum amount you are allowed to lose across a trader for the entire account. If your equities, let's say your real-time capital including open trades, ever drop below the certain percentage of your starting balance, your account is gone and period.
And unlike the daily loss, which reset every day, this one doesn't reset. It accumulates. You can lose 2% one day, 3% the next, and if your total across the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profits, but the original number you started with.
Okay, let's walk through a concentrated example. Suppose you have an instant funding account with an initial balance of $50,000 and your max lot limit is 6%, which is $3,000.
And that means your equity can never go below 47,000 ever. That ever matter if you make 1,000 yesterday and the total loss from the high boy back down to that result, it won't matter.
And remember, this rule includes both closed losses and floating losses. So if you lost 2,000 in closed trade and you have another 1,200 floating in red, your equity is now at 46,800. That's below the limit. Account is closed.
And just to be clear, it's not about the net gains or loss across trader. It's about where your equity stands in real time relative to that stop loss floor.
And here where it gets interesting and a little tricky. Let's say your account grew to 51,000 convey you in your feed.
But the max loss limit is still based on your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fund before you hit it.
Exactly, you now have a $4,000 in total buffer because the $51,000 minus the $47,000 equals $4,000. So your profit gives you the cushion, but the floats never move.
So what happens when you break it? Once your equity drops below the maximum loss threshold, even by a few dollars, auto liquidation triggers. On trades are closed immediately at market price.
And again, like with a daily loss, if the volatility or slip back, your account might close out below that line. That's just execution reality.
And more important, once expressed that account is permanently stable, you need to purchase a new pocket if you want to continue trading, no resets and no rollback.
Here is some pro tips to stay within the max loss rule. Alright people, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, check your total close loss every day. You should always know how you close to your max loss floor. Don't wait the double warning, calculate manually.
Second, use your profit as protections, not permissions. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gains by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
4. Stay cool when you close. If you down 5% out of your 6% limit, that is not the time to double down, that's the time to step away, pause and retain your entry.
Well, the biggest mistake, underestimating floating drawdown. Traders close 3 losers and think, okay, I still got room, but they forget about the 4 trade floating minus 1800.
Second, trader who trade recovery after a big day, they lose 4% in one day and come back to win the next. They thinking, well, they make it back, and instead take another 2%, boom, violation.
Third, and this one hurts, ignoring slipback during major news. Even with a tight stop, new candle can get you trades through your limit.
The max loss rule is there for a reason. It's not there to punish you. that will protect you from doing yourself. And every successful trader I know see their stop loss, whether personal or institutional, at non-negotiable boundary.
Right, it is a reality check. If you are consistently pushing up against your max loss, the problem isn't the rule. The problem is your system or your psychology.
Okay, so remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equities, not balance. It's both close and floating losses, and when it breaks, your calci guns. Okay, coming up next, we will explore the consistency rules, why steady profit matter more than the big spikes when it comes to growing, scaling, and getting back. But before turning up next, thanks for tuning in. We will take a short break and we'll return in just a few minutes to continue the live streams. Please stay with us and we will resume shortly. Your patience is great appreciated.
Trade. copy trade. We copy trade. We copy trade. Trade. Trade.
Alright traders, we will talk about the daily loss limits, and we just cover the maximum loss rules, two pillars to protect your capital. But now it's time to shift gear just a little and talk about risk, but not talk about risk but results. Because here things is not staying alive in the game. As WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning days. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spy from our reliable traders. It tells us whether you can make money over time or if you are just hoping to hit one big winner and roll the dice. And more importantly, it's also how we evaluate if a trader is eligible for withdrawal, profit sharing, and even scale up. So if you are funded and you are wondering why your payout didn't go through, this rule could be the reason.
And so let's define it clearly. The profit consistency measures of how even your profit are from day to day. The more balanced your profit, the lower your ratio, the less consistent, meaning you have a one giant profit day than that smaller or losing day, the higher your ratio.
Well, the idea is simple. If 80% of your total profit came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale. So next is how it is calculated. The formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you started the account, then multiply by 100.
The best days divide total profit multiply 100 equal the profit consistency percent.
And just to be clear, best day refer to your highest close profit day in a single calendar day, and the total profit is a sum of your closed profit minus any close loss or open loss across the line of the account.
So let's say you have had the following results over 5 trading days. 100 in day 1, day 2 200, day 3 minus 50, day 4 100, day 5 60.
Minus your total net profit cross 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal to 410.
And your best day was day 2, that $200 profit.
So now we apply the formulas. 200 divided by 410 equal to 0.5878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
And now let's say your account requires 20% profit consistency with e-commerce. This trader is way above that, so they couldn't qualify for payout yet.
So even though the traders is profitable, they are not consistent enough. They have a big day ones and make up almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to traders. If you're relying on 1 or 2 big days to carry your entire account, that's not professional trading. That volatility, you can get lucky, but you're gonna stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance are the ones who get scaled up, who get features, who get trusted with more capital.
Alright, so let's address the numbers. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. And now, how to improve your consistencies? Let's say you are over the limit. Don't panic. You are not disqualified. You just need to keep trading and even out the curve.
And here how to do that. Trade smaller size for a few days. Take smaller control win from 300 to 200 or 300 days. Avoid a big swing trader that could spike your ratio again. spread profit across multiple days, not one month setup.
And for those using EAs, monitor your equity curve. If your EAs is scaling profit heavily into one day, you might need to rebalance it. The bots might be profitable, but it won't pass the rules unless it's configured with prior logic in mind.
So here are some common mistakes to avoid. Mistake number 1, traders hitting target early then taking the rest of the week up. That inflates your best day and leave the rest of your curve flat.
Mistake 2. Open trading after a big day, thinking I'm safe now and trying your squeezy more instead of averaging out that high result.
Mistake 3 is thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master trader.
And why did rule matter? At the end of the day, this isn't about controlling you, it's about building habits that can handle scale. If you can be consistent with 25,000, what happens when we give you 100,000 or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
As we've seen it time and time again, the traders who respect its rules, they are ones of who gets multiple payout, referrals, and grows into the six-figure funded accounts.
So don't fear the rule, understand it, use it as a feedback tool. If your ratio is too high, great, that means you got profit. Now keep going and balance it out.
And remember, you don't need to calculate manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
And to recap, this rule is about the balance, not volumes. And to keep your back day under 20% of your total profit, spread your win across multiple sections and monitor your progress in the dashboard. We will work through the daily loss limits, tackle the maximum account loss, and examine how profit can shape your long-term and payout and growth. And now we'll write the finals and perhaps the most overlooked rule at all.
That's right. Traders often think the biggest enemy in the market, but truthfully, it's consistent, especially in how much you can risk from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you are managing your position sizing. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. At its core, the grid consistency rule is simple. You are not allowed to risk more than 2% of your internal account balance on any single trade idea.
And that includes all losses associated with that trade idea. Both low losses and floating losses, even fee commitment and swap are covered.
And for some accounts like the 510 no BC package, this rule gets even stricter. There the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcomes, it's about the progress. The more erratic your position size is, the more volatile your equity curve becomes, and what makes you hard to scale.
This rule protects both you and the firm. It helps reserve the capital, prevent lost equity swing, and make sure your act plays out over time. Think of it at your average headbar. If your position size prove up and down, 0.5 loss one day and 5 loss the next, the system flags it and not structure that channel.
This is why it's got technicals, but stay with us. The term trade ideas isn't just one other, it's a group of trade that share the same logic.
If you open 3 buy position on growth at a different time, that's one trade idea.
Because it's the same symbol, same directions, and close around the same time, even if you open at different times, they are seen as a single unified position from a risk perspective.
So the system doesn't look at your trades in isolation. It groups them into the logical bundles and applies the 2% rules across the entire bundle.
And you can have multiple separate trade ideas as long as each one respects the risk limits.
For example, if you go long on gold, short on GBP/GBY, and short on AUD/USD, and each position has its own distinct direction and asset, those are three separate trade ideas, and each one can raise up to 2%.
Let's say you go buy on gold and then you go buy and buy again. Now you have the three positions in the same direction on the same asset.
Yep, the system trades as last one trade idea. So if the combined floating risk or eventual loss from those positions is 2% of your starting balance, boom, you have broken the rule.
Okay, let's go ahead on. Suppose you have earned $100,000 accounts. The 2% mark risk per trade idea means you can't lose more than $2,000 on any trade idea total.
So if you open trade through gold by one lot each, and you don't play a stop loss, new hit, market drop 100 pips, it's loss at 1,000, that's to 2,000 total.
You write on the line, is slippage or swap as a few extra dollars? Does it rule broken, account flag or liquidated depending on enforcement model?
And on some accounts, especially instant funding account with stricter tolerance, this breach may result in loss of funding status or immediately closure.
So here are some pro tips to stay risk consistent. Number 1. Set your loss size based on account risk, not emotion. Know how many pips equal 2%.
Tip 2. Use stop loss order religiously, set them based on risk per trade idea, not redemption level.
Tip 3 is don't stack trade without calculating combined range. Just because one position is below 2% doesn't mean risk of the war.
Tip 4. Label your trader's idea mentally. If you are entering on the same setup, treat it as one, size it accordingly.
And tip 5. If you want to split an idea into multiple entries, do it smart, scale smaller, use micro lot if needed, and keep the total exposure below 2%.
So the most common reason traders break this rule, stocking multiple entries on one trade idea thinking it's still separate.
Second, opening high risk after a big after win, assuming they play inside with how many. Spoiler, the market doesn't care.
The third is neglecting floating loss. A trade may not be closed, but the floating rate still count toward your 2% range.
And this isn't church policy that professional active have followed this, bank followed it, and real trader followed it.
Exactly, we're not here to micromanage you, we're here to protect your account, our capital and the integrity of this community.
And traders who internalize the truth, who understand that small, consistent risk and is the foundations of scalable capital, those are the ones with growth. Those are the traders who go from the $25,000 to $1 million.
And if you want to be a professional trader, you have to think like one. And professional trader always know how much they're risking on every trade every day.
And if you're still guessing your loss sign or opening trades because the setup feels right, take this as your sign, step it up and get structure.
This is more than the rules, it's a habit, build it now and the path to bigger capital and longer payout become way more predictable. And that's, my friends, one of the 4 essential rules of trading MasterTrade include daily loss limits, maximum loss, profit consistency, risk consistency, master this, and now you are not just staying compliant, you're building a foundation for serious capital management, long-term payout, and scaling. You are watching the official WeMasterTrade live streams, and the best is still to come. Alright everyone, and this is it. You make this through the perfect condition and the structure of our accounts. Now let's talk about why this is what it's, because at the end of the day we know what every trader really want.
More capital, more room to trade, bigger amount, high reward, and without ever putting your own money at risk.
And that's exactly what the WeMasterTrade scale plan is built to provide. This is your roadmap from being a small account traders to managing a 1 million funded account. And it's not fantasies, it's a clear path with defined milestone.
The scale-up plans is our performance-based growth program at your choice well, meaning you hit your targets, avoid violation, and that smart trade risk controls. We increase your capital allocation, and in other words, you earn more room to trade without spending more out of pocket.
And let's be clear, this isn't to try to flip a subscription model or gimmick. You don't pay for scale up, you earn it, and through consistency, profit, and decrease life.
And the scaling is aggressive. We are talking about doubling, tripling, and eventually scaling you on the way to 1 million in funded capital, depending on where you start.
As WeMasterTrade, we offer two types of scale-up plans depending on your account type. First one is percentage-based scaling, and the other one is the amount-based scaling.
Let's start with a percentage-based plan. You begin at an evolution trader level 1 with 100% of your base account. Hit the 20% profit target with consistency, and you'll promote to level 2 where your capital increase by 50%.
From there, the growth explodes. Level 3, 300%, level 4, 600%, level 5, 1,200%, level 6, 2,400%, and finally, mass allocated capital, $1 million.
And for each level, you don't just need to hit the profit targets. You also need to complete at least 2 payout cycles, so the system knows you are not just performing, you are stable.
And now for instant funding account, the scale up work with the set dollar target, and the plan adjust depending on your initial funded size.
Let's take the 10,000 funded traders as an example. Here's how the levels look. Level 1, 10,000, level 2, 15,000, 30,000 at level 3, 60,000 at level 4, 120,000 at level 5, 240,000 at level 6, level 7, 480,000, level 8, 960,000, and finally level 9 at $1 million.
Each step passes all profit target, usually 10 to 20%, and some levels require profit consistencies, especially in the early stage. Once you are beyond level 3 or level 4, the consistency requirement drops and it becomes all about raw performance and risk apply.
And examples covering 55,000 account. If you start with a 55,000 account, if your first profit target is here 5,000 and hit that with consistency, your prom up to 37,500, then 75,000, then 150,000, all available to 1 million.
And don't worry, you don't lose your account if you don't hit the target fast. There are no time limits. You grow at your own pace as long as you stay within the rule.
To move to the next level, here's what you need to do. Once you reach the specified profit targets, 2, they avoid all violation, especially max loss or daily loss. 3, it completes at least 2 successful payouts, and the 4th, it maintains profit consistencies if required for that stage.
One condition are met, we issue the professional trading day agreement and upgrade your account size.
And the best part, with a bigger account, you are earning more without increasing your risk per trade. That's real capital leverage. So let me be real for a second. The most common mistake, overtrading to force the target. Traders push too hard trying to scale fast, then end up violating drawdown.
And another one, ignoring consistent in the early level. If you make 80% of your profit in one day, that payout won't qualify. You need to spread your win.
And of course, not planning your growth, you should know what your next scales targets and entries in a way that's prepared for it. Don't just trade for today, trade for level 7.
And scaling isn't just financial, it's mental. Every level brings more capital, but also more responsibly. If you start trading 10,000, how will you handle 300,000?
Exactly. That's why the scale up is step by step. We test your psychology, your discipline, your patience long before we lend you seven-figure capital.
And that's what makes it real funding, not demo hype, not a gimmick. It's a structural capital ladder for real trader.
So if you're wondering whether it's worth staying consistently, passing challenge and trading patiently, this is your answer. From 10,000 to 1 million is possible, and it be done repeatedly by WeMasterTrade trader.
You start with one rule following, profit making, discipline months, then we grow it.
So take your time, learn the structure, respect the rules, because here's as WeMasterTrade, when we say we scale performance, we mean it. And with that, we'll wrap up the full walkthroughs of WeMasterTrade funding system, from account setup to risk management to scale up. Whether you are starting with a $10,000 or $200,000, the road to 1 million is real. And alright, we will shoot through one of the most important parts: available pockets, the trading rule, and the scale up plans every trader should know before getting started. Now, let's catch up with the latest updates in our market news and see what's been happening in the trading communities this week. Can you let me know what's on us?
So, okay, good day traders. It's Tuesday, October 21st, and today's economic calendar is backed with key data from New Zealand, Australia, Canada, the UK, and the US. Let's break down what's been released so far and what to watch next. We started off early in the Asian section with New Zealand's trade balance, which came in much worse than expected, negative 1,355 billion, compares to a forecast of negative 554 million. That's a big miss and also weaker than last month's negative 1,235 billion. This means New Zealand exports are still awaiting its box, putting pressure on the New Zealand dollar. Later, New Zealand's credit card spending showed only 0.2% growth year over year, down sharply from 3.3% previously, another sign of showing consumer activity. From Australia, RBA Assistant Governor John spoke earlier this morning, maintaining a cautious tone on inflation and signaling that the Reserve Bank still wants to see more consistent price stability before considering rate cuts. That gave some mild short-term support to the Aussies. Now shifting to Europe, Germany Bundesbank President Nagel spoke at 2 a.m., emphasizing inflation control remains a top priority, so no major surprises there. Meanwhile, the Swiss trade balance improved slightly to 4.07 billion, higher than the previous 3.88 billion, although still below the 5.22 billion forecast. In the UK, the public sector net borrowing figure came in at 20.2 billion, slightly better than the forecast of 20.7 billion, and a big improvement from 15.3 billion last month. It's not massive mover, but it does show some fiscal pressure building up in the British economy. Then at 6 p.m. we will hear from ECB President Lagarde, which is always an important event for Euro traders. Any dovish turn could weigh on the euro, especially if she hints at lower growth in the eurozone. Moving into the North American session, all eyes are on Canada inflation data, and this is the main highlight of the day. We got multiple CPI measures coming out at 7:30 p.m. CPI month-over-month forecasted at minus 0.1%, previous also minus 0.1%. Median CPI year-over-year expected 3% versus previous 3.1%. Trim CPI year-over-year also 3%, down slightly from 3.3%. Common CPI year-over-year forecast 2.6%, previously 2.5%. Core CPI month-over-month expected to rise 0% after flat previous month. So overall inflation in Canada is expected to cool slightly, which could increase speculations about potential rate cuts by the Bank of Canada later this year. If the data comes in weaker than forecast, the Canada might fall sharply, but if inflation surprises to the upside, expect a strong rebound in the low mids. So that's all for today's calendar breakdown. Keep your eyes on the Canadian inflation data. That's where the real action will be today. Trade safely, and I will catch you on in the next update.
Thank you for your market news, and thank you everyone for tuning in and spending your time with us. If you found today's section helpful, don't forget to like, share, and follow our channel so you won't miss any future updates. And see you in the next live streams. Happy trading and stay consistent.
We copy trade.